Hi, Jay.
Hello.
You're a closer. Thank you for joining us. You are Wall Street's top cop. You also spent a lot of your career on Wall Street. You were also chair of the SEC. And I say all this because I think you have an understanding of a good sense of what capital markets can do at their best, but also a sense of kind of where they can be led astray by their worst impulses. And so I guess I would ask, with kind of some developments we've seen the last couple of months, do you think Wall Street's doing a particularly good job policing itself?
On a relative basis, I think.
Relative to
on a relative to history.
Okay.
Right, on a relative to history, I think Wall Street's doing a pretty good job. But look, we always have to be vigilant. Anything where you have trillions of dollars, billions of dollars, there are bad actors, they're attracted. And where are bad actors attracted? They're attracted to the places where you can get away with it the easiest. So those are the places that we have to continue to look. And so that's kind of my job, again, is to help my colleagues look for the places where fraud is most likely to be occurring.
Where do you see that right now?
Well, I think we're seeing, there's this, let me debunk a myth all but a little bit. I would say all of the pearl clutching over private credit writ large is a little overblown. But there are areas of the private credit markets, which is, I think, anything other than bank finance and, lit equities, maybe some bonds. There are areas of it where there's been recent trouble, and we should continue to look, especially finance, factoring, receivables, some of the age-old places where when asset values go down and rates go up, people cut corners. Some old lessons that we're learning again.
Have to learn again. We were just talking about this with Mike, and I was kind of saying we've seen a lot of what is broadly called asset-backed financing, but there's a certain generation of person who thinks that assets are like tires that you can kick and like houses that you can measure and assets that if the company goes belly up, you can go take.
No, you made I do read your columns, and you made a really good point about that. Do auditors know how to audit things that are not as tangible as they once were?
But do they? I mean, is there a due diligence problem?
Look, I think we have to learn. People who, mistake that's often made is when people start lending against resource-based companies based on EBITDA, not some underwriting the underlying value. It happens all the time whenever we have upswings in markets, and a whole new set of auditors need to learn all over again. You know what? And I hope I'm this way. Being in these jobs, whether you're an auditor or a regulator or a prosecutor, you should have some humility that there are new things that are coming that you have to learn, or old things that are coming in new forms that you have to learn.
Okay. We talked with Greg about this earlier, but when you were running the SEC, you had a real point of view on broader access to capital markets, particularly to alternative investments, where that ought to fit. Seems like we're going to have some kind of national program here that's going to bring a lot more people into the capital markets. How would you run it?
How does a well-run pension fund look? Okay, let's talk about somebody saving for retirement who's 20 years old. What should their portfolio look like? I don't think it should be, 90% the S&P 500, 10% some, cash or bond-like alternative. It should look like a well-run pension fund. It should be invested across, if you want to just stick it to domestically, it should be invested across American industry as much as possible. That's not the S&P 500. Over-concentrated into, 6 stocks that are 30%? Is that really how you want to invest your money for the next 30 years? So, look, I don't know if you've talked about the Michael Dell. Yeah,
we did earlier.
Okay.
But you like this.
Oh, I'm so passionate about this. Getting young people in America connected to the future of America through investment, seeing something, compound. Let's just say they're getting 12% every 7 years, doubling from the time you're 15, and seeing what it means to be invested in America. I don't think there could be anything better to orient somebody toward a better future.
When you were at the SEC, and I'd ask you about that hat back on again, one of the roles there is investor protection, but also balancing that with capital formation and functioning markets. For the last there's been a period of time where private investments have done a lot better than public. And so if you restrict the access to them to only wealthy people, all you're going to do is get more income inequality. But as we've discussed with a bunch of our guests, there's probably something bad coming somewhere in some corner of a private market that we haven't tested, that we haven't quite expected. Where's the suitability test? How much of this belongs in the accounts of people who can't afford to lose it?
Well, I think you have to go pretty far back, but there was a period where the S&P 500 way underperformed for a number of years because of the kinds of corrections that we talk about. It's really about having a portfolio, I believe, that represents the growth of America. So, and if you're concentrated in the S&P 500, you're missing out on a lot of the growth of America.
Okay.
So, I mean, look, and there are ways to solve this. Well-managed pension funds have good fiduciaries who are, ensuring that those private investments have the appropriate safeguards.
It'll be ironic if, 50 years after the decline of the defined benefit pension plan, we somehow recreated it.
So I'm generally thought of, I think, as a fairly laissez-faire, less government is better, or I would say smart regulation versus overregulation. I think that these accounts and mandatory savings in them, employer, like they've done in Australia. Australia has solved its retirement problem through their superannuation funds. I mean, it's amazing. And they've connected a whole generation of people to the economy. The mindset of the people in their 20s and 30s in Australia is much more capitalist oriented than it was 20 years ago.
We have Social Security, but it's not invested in the economy.
No, it's
flipping a coupon.
It's a current funded program. When you explain how Social Security works to even people in college, they are astonished.
Most of them don't think they'll see it, I think.
Well, most of them, once you explain it to them, they don't think they'll see it.
Yeah. The Southern District has sort of been this bastion of really white-collar financial enforcement. It tends to operate with a lot of leeway, but you do have a lot of other things on your plate as U.S. Attorney. And I want to tell you, I was talking to a white-collar defense lawyer the other day who was worried that sort of the focus on immigration, urban blight. You had a big case a couple weeks ago about a drug trafficking
Washington
in
Square
Park. That they were going to sort of swamp out the financial focus. And I'm wondering if you could spare a thought for the defense bar and reassure.
I think the defense bar shouldn't worry about, the bread line.
But how do you split your? I'll let them know. But how do you think? I mean, the U.S. Attorney it's a big job, and again, it's had this sort of local footprint and focus, sort of based on what's going on in its backyard. But the justice system has really been nationalized in a lot of ways, in the way that a lot of other things have been. And I don't know. I'm curious, sort of how you spend your time.
I spend a fair amount of time with the folks in our white collar group, saying, and we're not reducing the size. If anything, we're going to increase the size of our white collar group just to let those folks know they can still pay for college. But
I'll pass along the message.
But identifying the areas where fraud is most likely. And it changes. An area that I don't like is opaque offshore accounts. Like everybody who trades, every American citizen who trades, we can find your trades. There are avenues for non-US persons to trade where it's much harder to trace their trades. I don't like that. And that's probably an area that has more problems than it should.
What can you do about it?
Two things. Go after them and make the intermediaries responsible for finding out who's trading.
Because probably the intermediary is somewhere within 5 miles of this building right now.
Yeah.
You kind of said, you said a bit that you had a reputation for being a little lighter on regulation, but sort of finding the edge of nonsense. And people forget actually that you were quite strict in certain corners of the kind of memeiest meme nonsense of 2020, 21. When was Hertz? 2019.
2019, 2020.
This is like a bankrupt company trying to pretty obviously raise money from its meme investors, and you said essentially no. And
I said not.
Think very carefully.
I said not enough disclosure.
Okay.
As to what.
You said go back and write in the prospectus that you are actually stealing money from these people, and then you can see if you can float. That was closer. But it looked for a while like a lot of that stuff was going away, particularly when interest rates went up and there were other things to do. But actually, it hasn't, and there is still a fair amount of froth. And I'm curious where you think the line is between.
Look, you can't regulate euphoria.
Okay.
Right? I can't substitute my judgment as to whether you're too optimistic, whether the market is too optimistic for other folks. That's not something we should do, right? I mean, if you did that, you would have said, you know what, you can't invest in Amazon. And how can you invest in a company that makes losses only for, how many years was it?
25 years, yeah.
Yeah, right? And but what you can do is when people get fast and loose with disclosure, you know, when people start using metrics that really don't have anything to do with the long-term performance or can't be explained. In particular, using those kinds of metrics in the retail market. What I really hate are metrics that are pumped in the retail market where the most sophisticated investors have told the company, that's not how I look at things.
Okay. What do you make of prediction markets? How should they be regulated?
In any new thing, and I don't want to get ahead of the CFTC or the SEC, but in any new thing, you have to ask yourself, what function is this product performing? So people talked about ICOs. Mm-hmm. People are like, oh no, it's not a stock, it's a coin. Like, well, it's an investment in a company that you expect to get a return. So the function it's performing is the same as a stock or the same as some kind of bond. The real question is, what function are prediction markets providing? And start there. I mean, look, people look for regulatory relief by providing a close enough function to something that's highly regulated, and then they can operate under less regulation. That's America. That's okay. That's what people do. But you have to ask yourself, is it far enough away from a current function that's finally regulated that it should be regulated differently?
There was, I think.
Does that make sense?
It does. And there was, I think it turned out to be slightly less nefarious than it looked, but there was like some insider trading around the Nobel Prize, if you remember a couple weeks back, where someone, if you looked at the ledger, I think on Polymarket, someone clearly knew who was going to win the Nobel Peace Prize before it was announced. And we all kind of thought, well, that's weird and fun, but is it illegal? And I'm curious, as when you talk to these betting market sites, they have real interest to go into sort of more traditional kind of financial expressions. We were talking to Igor earlier about, will Walmart beat its earnings or not? It seems like a pretty good prediction market and probably a cleaner way to express a thesis than buying a bunch of call options. I don't know, should they be regulated the same way if there were?
I mean, look, when does it look just like a cash settled option on a stock? And when does it look like a bet on a football game? Okay. Those are two different functions. And look, life's about trying to find a framework for making those hard choices.
Okay.
Like if I go into the betting shop and buy a cash settled option on, American Express, should it just be regulated as a bet or should it be regulated as a cash settled option?
Fair enough. But that's how you would think about it.
That's how I would think about it.
Yeah.
Luckily, I don't have to think about those things, other than when you're asking me questions.
Well, someone will do something and get in trouble and end up in your line of sight, I suppose. I do want to ask a question about the job and the president, which is, we've seen a lot of pardons. Just the other day, someone who'd been convicted a year ago in Eastern District of securities fraud. Your predecessor had Trevor Milton, Devin Archer, both of whom were convicted and pardoned by the president. I guess I'm curious, as you pursue these big financial cases, you get a conviction, you cheer your line prosecutors on, and then they get pardoned, or if you get told by the White House not to bother, how do you think about that? So
last night I was, the roles were reversed. I was interviewing Justice Kennedy about his new book. And I'm not going to comment on any specific cases. It's just not appropriate. But our constitutional system is pretty remarkable in that in almost all cases, whatever branch of government is acting, there's a check. But for example, the Supreme Court, the old Justice Jackson quip, we're not final because we're infallible. We're infallible because we're final. I mean, they have the final word. And in the pardon, the president has the final word.
Okay. Just where we hope to end on Chinese small cap fraud. But I did want to ask you about it because it's been an issue that's brewing for a couple of months and I think has landed on your plate in a way. But can you explain a little bit what you're seeing and what you plan to do about it?
Yeah, I think you asked me about pockets where I'm worried about, and I try to be very transparent about my concerns. Maybe they turn out not to be well-founded, and I'm not accusing anyone of anything, just to be clear, but where I see activity I don't like, small cap stocks, mostly offshore, where the trading is such that it looks so much like a pump and dump, so much like manipulation, particularly in thin markets. And that's one of those markets where it's very difficult to trace who is trading. So I'm looking closely at whether we have a regulatory response, an enforcement response, some kind of both. But that's not a market that I'm happy with at the moment.
You think there's state actors involved in it?
I don't know. There are definitely, let me say this, there are definitely state actors that are involved in things that we look at.
Well, we will let you get to the bottom of all of them. Thank you so much for joining us.
Thanks, Liz.
We appreciate it.